Hello and welcome to Money Matters. The cryptoverse saw prices plummet at the end of last year, with Bitcoin and Ethereum continuing their downward trend through January. So is the bubble finally bursting, as the doomsayers might hope, or is it just a correction? What does 2022 have in store for the crypto space? On November 10 last year, Bitcoin hit an all-time high of just over $68,000, while Ethereum was close to touching $5,000 US. And then came the fall, with Bitcoin dropping to the low $30,000 and Ethereum to the low 2000s, a 50% drop for Bitcoin. Fears of a crypto winter are spreading among investors, many whom are new to the space. A crypto winter refers to major bear markets in the digital currency's short history, when prices have crashed by as much as 80% from all-time highs. Dave Chapman, chairman of OSL Brokerage, the only licensed brokerage in Hong Kong, remains bullish and says the price drop needs to be put into context.
Digital assets, they have been the best performing assets of the last decade. They were also one of the best performing assets last year. I think we really do have to zoom out. Last year was the first time that the total digital asset market cap grew to $3 trillion, with Bitcoin itself exceeding $1 trillion market cap. And we saw very large, major brands such as Tesla and Square, who actually started to buy Bitcoin as part of their Treasury Reserve exercises.
Michel, president of Hashkey Group, which provides solutions and services in digital asset management, sees this as a correction.
Yes, short-term pricing may go out of whack, may get too expensive. But I think you need to look at this as a long-term trend. I'm happy to see a correction because ultimately some of these projects and I think have gotten a little bit overheated, and the market does need a correction. But we continue to believe in the technology.
Sharp moves like this, whether there are corrections or not, show the need for education and regulation. Experts predict 2022 to be a year of tighter controls, as we've already seen Singapore crack down on advertising crypto investing, despite the fact that it also allows retail investors to buy and sell them.
From the standpoint of regulators, are the concern about what happens if something goes wrong and you have very large numbers of people who are subjected to fraud or lose their money. And, of course, who are they going to blame? They're going to blame the regulators. And so, as a result, you have an incentive to figure out how to try to reel things in a little bit. And I think that's exactly where we are going into 2022.
Michel says regulations in different territories will vary based on the type of financial environment and market of each place. He says Japan, one of the first markets to open to crypto, is more retail-focused.
It actually had a number of security issues in the past, so they're very much focused on ensuring that the platform is safe, custodial arrangements are done properly.
He says Hong Kong is a much more international market, focused on fundraising and bringing international companies and investors to Hong Kong.
I can imagine the future of Hong Kong being a very core center for the digital asset business. It's very much a professional market. It's much less of a retail market.
Stablecoins, cryptocurrencies pegged to a fiat in much the same way the Hong Kong dollar is pegged to the US dollar, are seeing more regulations built around them globally this year as the G20 countries work together to find a comprehensive approach to stablecoins such as Tether or USD Coin, which are one-to-one with the US dollar. The Hong Kong Monetary Authority launched an open forum on the topic in January until the end of March and plans to introduce the new regime by 2024.
I think it's really good news that this has come out because it signals that Hong Kong is not following the approach of the mainland, but rather continuing to be at least potentially open for a range of international stablecoin projects.
The The HKMA has acknowledged that stablecoins could become a widely accepted means of payment. And with Hong Kong ranked the third largest foreign exchange center in the world after London and New York, international payments, trade payments, foreign exchange, and finance payments are central to Hong Kong.
And so now Hong Kong is increasingly, I think, looking at how to be a hub, in particular between the mainland central bank digital currency, BECNY, and other currencies, and potentially instruments like stablecoins, which are linked to other fiat currencies.
China has banned digital currencies with the exception of the digital yuan, which it rolled out in time for the Winter Olympics. Uptake on the mainland has hit 300 million. The ECNY allows for interoperability across all platforms, public and private, whether from the central bank, private banks, or Alipay and WeChat Pay.
From the standpoint of the Chinese government, that duopoly was also having anti-competitive effects, where essentially the two companies were using their ecosystems to both their customers' advantage, but also to their own. But arguably that was limiting competition and innovation from the standpoint of the country. Now, because of rule changes, both Ali and Tencent have had to open their systems' interoperability in any event, so both the rollout itself, as well as related regulatory changes, have broken those closed markets.
Another theme to look out for this year is, of course, the metaverse, which is a more immersive form of the internet, allowing users to enter games, shops, or anything we have in the real world, but walk around and interact in the online versions. Walmart announced they will be setting up shop in the space and offering their own digital currency to spend on its products in the metaverse.
With respect to these new buzzwords, whether they be metaverse, NFTs, play to earn, digital real estate, I think a lot of people are still quite confused as to what it means. But I do think that the virtual world or the digital world will actually play a significant part in the way that we view everything from entertainment to commerce.
I think you can see that a lot of big gaming companies globally, Microsoft, I think this morning just made an announcement. They're all going into metaverse. And guess how metaverse would definitely have a lot of the technology will be built on blockchain. And a lot of new assets will also come to the market. Things that are very different from traditional financial products.
With the growth of the cryptoverse in our everyday lives, will Hong Kongers see digital assets become more mainstream and not just available to professional investors? The Securities and Futures Commission recently issued a circular allowing financial institutions such as banks and brokers to offer digital assets to professional investors.
We will see some banks offer products that include the ability to buy and sell digital assets like Bitcoin, and we've seen very innovative firms like DBS and Standard Chartered who have really claimed their stake early in this game. We generally feel very strongly that they will start to offer these products to retail. And I think that breaks down a lot of barriers.
Maybe spring is coming to the cryptoverse.